Good morning, everyone. Welcome to the Euro trade. Let's see what the markets have in store for us today. I'm probably going to be staying on copper, and I do have some micros in. Not feeling the best today. But yeah, copper seems less crazy than some of the other metals. But before we begin, if we're meeting for the first time, welcome. I'm Market Tucker D. I've been trading for 19 years at this point. Since 2013, I've become a prop trader, and I'm mainly focused on commodities trading. Therefore, we're going to be looking at precious metals, base metals, and sometimes energies markets as well. So gasoline futures, crude oil, maybe even heating oil and natural gas. Alright, so let's have an overview of the overnight activities. We are fairly range bound on copper. At the moment, it's trying to break below the Asia low. Now, looking at the options chain, if we end up losing 580, there's a very good chance that we reach 575 and subsequently 570. We did go into a new all-time high a while back, last week, and the buyers are currently not strong enough to carry on going higher. So therefore we saw the liquidity vacuum, wick above the attempted move higher, which failed on the first run. So now they would need to go slightly lower in order to pick up some more momentum and speed, but we shall see how they want to play that. And let me just see what's going on here. Okay, all good. So yeah, that's the weekly time frame bird's eye view, right? So we're still in an uptrend, but there is some distribution, maybe even a reaccumulation that is happening at the moment. If I look at the daily chart, this is potentially a drop base, then maybe drop, we'll see. But at the moment it's a consolidation at the previous point of the most recent demand area, which is not a high quality demand because we didn't stay away from it for a long time. And we are retesting it after we barely moved away from it on that time frame. Now if I have a look at the volume profile, this whole area is very, very thick. So there's a lot of volume there. And therefore I'm favoring some shorts at this point. That might change as the day goes on, especially if we cannot stay outside of the Asia range for any long periods of time. Now I am in on some micros here. However, I did put my analysis on the main one, and a couple of things stand out. So we have the chop zone coming up, but there is also a pretty large sort of gamma flip zone between 585 and 580. But this is why I'm saying if we lose 580, that will push us back into a negative gamma, and we may see acceleration towards these lower areas. Right now, the Asia low is being tested, and some of the volume is building. So I don't think this looks like a wick. So if you see how the whole move down, this is how I differentiate between whether it's stop run and reverse by the dealers, or whether we just carry on slowly going lower. It's volume, right? Volume is the difference. And I always say I don't use volume much, but I still use it, and yet for some reason some people have translated me saying I don't use volume much, as in like I don't base all of my decisions on volume. I use, other things. I use the options chain, I use TPO profile, statistical averages, time of day, but I do filter entries depending on the hypotheses that I have around a particular level based on what the volume is doing. So here I can see that the volume is very even. As we're going lower, we're building volume. This is a 5-minute chart. And now we're below the overnight low. So what does that mean? It means it's very likely not a spike, not a sweep that then results in a reclaim of the Asia range very quickly. But instead it's just gradually going lower. And that tends to be more a hallmark of a true breakout. So we'll see. But yeah, so I am expecting this time of the day to be a little bit quieter, especially for the first hour or so of this stream. And then we may see some more pickup in the volume and all that as the market starts to make a decision closer to the LME start, which is not happening for another 90 minutes, well, actually longer than that, 2 hours actually. And then we may see what they want to decide. Silver has gone a little too crazy, so until silver begins to chill, I don't really want to trade it. I think it's too much risk on these accounts. You would need, I think to safely trade even a silver micro, you would need at least 50 grand of buffer, actual buffer, not like a nominal value of the account that only has 2,000 of drawdown. And yeah, so I'm not really that keen currently on silver, which is why we're wearing the copper blazer, right? So I'm also going to be popping into the fast markets just for like half an hour today. That's going to be at 9 a.m. Central. And I do hope I feel a little bit better because I'm feeling absolutely horrendous today. Alright, so to the upside, let's play the devil's advocate. So if we go higher, reclaim the overnight range, I would probably still look for 590 to be our decision point. If they decide to start holding above 590, there's no fade. In that case, the next area that I would be looking for would not be 595 because that's actually fairly, let me just check that. I think it's not a massive level. At least it wasn't when I was looking at it last night. Yeah, so it's not, that would be like more targets for longs if I managed to catch any, but I would not be fading anything here because there's not enough interest there. But 6 evens remains a massive level. Is it likely that it's going to be reached today? Well, I mean, it's within the day's range. It's within the statistical range, but that doesn't mean that we're going to get there today, especially not if we lose 580 and we cannot reclaim the Asia range. So this is the LME anchored view up. I don't need that. Now, what I've done here on this micro, the reason why it looks a bit weird, is because I started off with 2. Ideally, if I'm going to scale into something, I like to start with 4. But again, because I'm just not thinking, I couldn't even have my coffee today, so I need to be very careful what I do today. But yeah, so I entered on a break of VWAP this morning as we were kind of going in, seeing this increase in volume that happened prior. So I was like, okay, let's see if we can maybe get some commitment. I'm just going to put a fixed volume profile on here so we can look at the value area and how that's developing. We're below the point of control. Point of control is not necessarily control of anything, it's like fair value of the value. And typically I like to go into longs underneath it, so away from it, and same thing to the upside. I don't like to go into the point of control because usually there's a bit of diddling around, because like I said, it is the middle of the middle, and I will more readily use it as a target than anything else. But for this particular entry, it was the weakness around VWAP and this increasing volume that we already got as that was happening, because the sweeps don't look that way. The sweeps are much more aggressive, and you typically have like non-committal movement up to the level of interest, then a huge 5 minute or 3 minute, 2 minute, like it has to be a low time frame, a massive smash that is massively bigger. The volume bar that is very, very big when you compare it to the preceding bars. Let me see if I can find one somewhere. Alright, so this would be something. So if you can only see this, let me get rid of this one. So if you can only see this at the time, all you have is like some, let's say you have another low here, and then you see a big volume bar that is massively bigger, about twice as much size than the previous volume bar, and then the previous bars were like all non-committal. They're like up, down, up, down, up, down, up, down, and then smash. That tends to be more prone to that liquidity sweep and reverse, mean reversion. But this one just doesn't look like that, does it? So this one, I was basically seeing this, so slowly increasing volume, and then as I entered, I saw more increase of volume. So this is a steady increase. It's not a sweep that comes out of nowhere. It's just like boom. It's like what? So yeah. So I'm kind of thinking we stay outside of the Asia, and of course anything can happen. They can also change their mind. The downtrend could stop. They could start chopping around in a range that we know happens around this time of day. But that's the plan. So we lose 580. I will be looking more towards the lower levels of 575 and maybe even 570 if we end up selling off quite significantly. So Ross says, if you go back the day after Liberation Day, copper absolutely down for 3 days, I'd keep it right up. Ross, that was an outlier. That was a result of tariffs, so I wouldn't really bank on that being like a statistical thing that happens this time of the year as a benchmark for what we should expect, right? So I'm actually expecting a pretty orderly sell-off here. But the sell-off has nothing to do with what happened last year in and around tariffs. It's purely based on the context of the day and how the dealers are positioned today. So we do have... So the thing is, the way I'm reading this, the dealers were positioned for a fade at 590, right? So we got that. And... interestingly, it's they're hedging for the upside movement, and then downside, they don't really have much protection. So again, if we lose 580, that could get a little ugly because there's nothing really much to protect it. So the way I'm seeing this is like mainly selling puts. Just by looking at the just the overall positioning, really. But the implied volatility is actually remarkably stable today, especially in copper. yeah, so I don't think we are looking at any kind of a gamma squeeze, crazy gamma squeeze today. It could happen, right? It's just, it's less probable from the way things look right now, but we'll see. However, I'm reading this as the downside being quite vulnerable below 580. So the first point of interest is that we lose Asia low and that we stay underneath it. At the moment we created some single prints. So let me see if I can draw that out for you. So here was the initial balance. And then if you analyze how we left this, we have a small single print on the downside. Now that could get closed, of course, but there's still a little bit of single print left. The whole setup that I'm doing is actually a value acceptance down. It's a special situation play. And we already rotated and overshot the previous day value. So I'm going to draw yesterday's value from London. So even though yesterday was a partial day and it was pretty muted, so that was value area from yesterday. We accepted it, had the weakness, rotated all the way through it, and now they're just messing around a little bit at the Asia low, waiting for further movement. But whenever we get that value acceptance play based on the previous day's value, they rarely stop at value low, and they at the very least fill the range to the downside. And the range today for London is closer, it's actually 580.80. However, we have the full ADR low, which is a statistical average, down around 575.40. So maybe we can put a couple of markers there. So 80.80, 80.80. Okay. So this would be the London exhaustion, how much we usually move for London. That's Brimmer Bear dreaming and making silly noises in the background. He's a funny boy. Alright, and this is your full ADR. So quite a ways away, right? But if we get into that gamma regime where it's always just tumbling down, they will overshoot. They will overshoot, and they will go for the next options level of interest, and that is, this one is a decision point, and then if we lose that, we have 575, and then the next one is 570. So it could be a swing. It could be a swing today. Gold, in its own story, we have the expiry happening this week. So yeah, let's have a look at some more comments. EMS says, I got my 5K payout. Very nice. Friday to Saturday, I'm going to be doing 250K XFAs to make your 9K drawdown. Low-key half size, silver baking, going to be fun. Just be careful with silver, because like I said, it's gone into like 78% on volatility. That's crazy. MS, I'm not saying that I'm selling puts. I'm saying that the dealers are selling puts. I would not be doing that at these levels. Unless we get stuck in a range, I am not selling puts. I would like it. So selling puts is really, to me, for range-bound markets, right? So if it's very range-bound and you have a range that you can justify for whatever reason, then you can expect it to be either neutral or mildly bullish, but you don't really want it to go absolutely crazy. However, the way the dealers position themselves, they always position themselves against the majority of the retail, if that makes sense. And then when something unexpected happens, they have to hedge the underlying futures to actually adjust the market neutrality that they're chasing. So they're not chasing any particular profits, they're literally just chasing delta neutral states. Can we actually do swing trades? No. On Topstep and most prop firms, they do not allow swing trading because of the overnight margins that are enormous. And yes, some people will be like, but it's not sim. It's not all sim. We actually do have a live trading department. And that means, like, at the moment, silver margins are crazy. Last time I looked, they were like 30 grand. For just one micro, which is insane. So let's just look at that. All right, they've come down on the. Okay, so micro is 7 grand. That's still crazy. Full silver, nearly 36 grand. Not surprised. Silver is a contract that trades like $25 per tick, so that's a lot. They do E-mini silver, which I still think is too big. I think that the micro silver is not small enough. So it's like $5. And if you compare that to platinum, full platinum, the only platinum contract that you have, that's $5. So it's like, so why is then micro silver called a micro when it's not really a true micro, because it's also $5? So I don't really understand how they're. And yes, I have a Series 3, so I do understand the logistics of how they price the contracts and stuff. It's just, it doesn't make much sense. If you're making a product for the retail side of things, wouldn't you want to make it more affordable rather than going, well, the other one is very big, so we're not going to do 1/10 of the value, we're going to do 1/5 of the value. It's like everything else is 1/10 of the value. Why does this differ? Oh, it's a big contract. It's like, yeah, but so is, something like ES, and yet you made a true micro for that. So what are you doing? But there's just I just think that CME needs to step into the 21st century sometimes. Yeah, MS is correct. Not even try to be funny here. Please, no one trade the silver major 5 times micro silver. Yeah. And in a volatility of 78%, you won't last like 3 seconds. 3 seconds in a position. You would need probably to use. You know how people use like 35 points, 40 points on NASDAQ, which ends up being like 120 ticks, right? You would need to do the same on silver, because that's the range. Silver has the same range that NASDAQ has when it's like crazy. It's like 1,000 ticks of average per day. Even my AI platform that I use, I said, use the algos that we worked on, and then I'm like, track this, do that, correct this, and then I see what it's done. And I gave it the ADR levels. And I kid you not, the AI goes, it is very likely that your projections are wrong, because it seems like it's more a larger time frame than an intraday. And I was like, stop hallucinating. cursor and just just use the data that I'm giving you. It's like, but it's impossible that it actually used the words, it's impossible that silver is moving that much. And I'm like, I'm going to provide you with a daily chart. You can make up your own mind, AI. And then it saw the chart, digested it, and then went, oh my God, you are right. This is absolutely crazy. This is incredible. And it went into this all kind of like pluribus. If you watch the show, they're all like ultra nice and always surprised and very, very happy. So that's the AI for you. And it was like constantly in awe of. I'm like, can we stop it with a fake, fake kind of like, I don't know. The AI stuff is great, but the way they've made it communicate with people, somebody has trained it to communicate a certain way that I find extraordinarily annoying. Maybe that's just me. But yeah, if you want to trade full silver, just don't do it on prop, and please don't do it if you don't have like at least for full silver. I would say like $250,000 upwards to trade it safely, right? Actual cash. So you have to be very well positioned and capitalized in order to take advantage of full silver. It is a monster, Even on my larger account, I've only traded like one full silver. It's crazy. And I use a sizable stop loss. So over there, I will easily use 150 ticks. So it's a lot of risk. But on prop, even micro silver at this time, until it needs to come down to about, at the very least, 60% of implied volatility. As long as it's staying elevated, up at now it's 74, it was 78 last Friday. That needs to come down to 60. Then it's going to become a little bit more tradable. So be very careful of the expanded volatility. Because you just won't last. You just won't last. How am I doing? Jeff wants to know, do I usually trade the New York session or the Asian session? I'm just curious, which session to focus on? You know what? I will just focus on wherever the smoothest movement is. At this point, after doing this for nearly 2 decades, I've had the privilege to spend time trading each of the sessions, right? Initially, when I started, the New York session was the one. So that's where I traded crude oil and gold religiously for many, many years. But then there were times when I was still touring where we would go off to do a tour in Asia. And you just can't be away, this weird time of day. Either I will be doing a gig or I will be doing a, some kind of media thing, or, we would be busy at the time when the New York session would be would be trading when I was doing the tours. So, okay, so we have this movement away from Asia low. That's pretty good. Let's see what happens around this average session range low, because 580 should be the next decision point. There is a little bit of interest at 582. I would kind of call it more of a chop zone between 82 and 80. But I'm willing to withstand that in favor of a larger movement down. And again, this is probably not going to be some monstrously big day. I also have to get to a doctor's appointment right after the stream. Well, not right after, but I have to go and travel. So I probably won't be able to keep all of it because last time when I was waiting, they didn't have, I don't know whether they block the signals or something, but you couldn't get Wi-Fi. So, I was joking that the hospital was located in the Middle Ages. There was no Wi-Fi. But yeah, it's weird. And then they typically don't let you use theirs. And I'm like, what are you hiding? Like, it's like, who is going to assault the NHS? And I know why they do it is because they have such old systems and they're trying to bring it up. But for some reason, hospitals over here, especially out in the sticks where I am, they are a bit strange. Like even where I live, we don't actually have a 5G mast, so it's like there's the town 1 mile down the road, but even they don't have a good signal. So I can have a great signal on a remote Greek island, middle of nowhere, but I can't have a signal in parts of West Sussex. It's like, really? So I just find that a little bit strange. Like, what are the councils doing here? Anyways, I'm feeling a little bit off, so I'm moaning a lot about things that bother me. It's all first world problems. So yeah, I used to trade New York many moons ago, almost exclusively. And then over the years, I started dipping into other things. So when I joined a prop firm in London, they were trading DAX and Bund, and the hours were the London hours, right? So you'd have to get into the office. Typically, we would have to be there at 7. Then we would have a meeting. I don't know why, because everybody had their own strategies, but they were doing like an overview. And then we would go into trading things like, Asia high-low takeout. I typically like to wait until later for my sort of failed auctions to appear on DAX, which is what I love doing on DAX. Failed auctions are beautiful. Or if you get like a good mean reversion down and then you touch the outer value from the previous day, that would be a very good setup as well. And at the end of the day, this is what these streams were supposed to be, but then we never got DAX. And then with the touring around Asia and having to look at the how the price moves for Asia, I always found that trading Asia-related products, and when I was still trading Forex, again, very long time ago, I would be trading Australian or New Zealand related currencies. And two of my favorites back then, before everything dried up after the austerity measures were introduced, was GBP New Zealand. GBP Yen was a good one as well. So cross pairs, they were like a little bit odd, exotic cross pairs. But when I started doing futures, I realized that the metals, gold in particular, tends to move really well for Asia. And up until recently, I would say last couple of years, Asia was pretty good for gold just as a benchmark. And then silver started to get mixed into that in the last sort of few months. But even back in the day, silver was doing really well, but it was very range bound though. I remember when I was creating the Pro Dev course, I was using silver as a very good example of a almost like permanently reactive supply and demand areas in a range, right? And that's because it was artificially pegged, so they were holding down the prices. So whilst the actual price of silver in Shanghai was like moving ever so slightly higher, they kept it depressed on this side. And here we go, another sweep to the downside. That's a very, very good move. See, I wish London was like this every day, but sadly it isn't. It's mostly like watching paint dry. And again, wish I was in with more. But what is that? That looks a bit newsy. It's the this is the zoo, ZEW. Why would that affect copper? I don't know. But it's the as Andre likes to call it, the zoo. It's German ZEW. That's current economic sentiment. They can bring a little bit of oomph into the markets. So yeah, at this point, I just trade whichever session provides me the smoothest movement. At this particular time, that's Asia. That might change. You know, we might go back to COMEX London close being the one. All right, so they dipped it almost down to 81, but not quite to a decision point of 80. We still need to stay below Asia, so we're trying to do that, definitely trying to do that. But we also need to go below 80. We have not done that. So my observe, orient, decide, and act loops are telling me that only one part of that equation is done, and that I need to wait. But we're going to stay on a 30-minute time frame. There is nothing for me to do on a low time frame now. The volume is still building momentum from the top, and we just need to chill. So some people will be closing their positions as soon as there's a move on the other side, but I'm using Asia low. And so the reason why this looks this way, I suppose I should explain. So I entered with 2. Then once I got a decent amount of movement, I entered another one. That meant that the stop for this new one is going to go basically at break even of the entire position. But I don't want the entire position to break even. I want the original risk to stay where it is until we move very far away, and I may not even touch it again. Whenever I'm trading with multiple lots, I do prefer to enter with 4 and then to start scaling it with 1, 2, and maximum 3. Why? Because otherwise, if you start with 1, then you scale in with another one, you're effectively increasing the position size by 100%. And that messes up your average entry. So the only way to not terribly mess up your average entry and to keep it where you want it to be is to enter with multiple lots and then to add 1 or 2. If I'm trading a large account that can handle, you know, let's say it's a high 6-figure account, I will usually start the positions with 10 and then add 1 mini as the thing develops. Sometimes I will add 5, 5, and 5 in a zone, so working a position up to some kind of a core size position, and then, you know, adding past the 15 lots, 16, 17, 18, 19. I would be doing that as it moves in my favor, and that way you increase the profit, but you don't mess up the average too much. But what I see people doing all the time, where they're scaling in, they start with 1, then they add another one, then they add another one. And I'm like, you've just increased your position size by 150%, and you have no idea what the original trade entry was. So it's too much, right? And I've even seen people who are continually like adding and adding and adding so much that the average is constantly trailing the real-time price. So what they're trying to do, they're trailing the stock behind it, hoping that the markets are going to kind of continue. And then the market just comes back on them and you get nothing, even though you were correct from the point of entry of decision to the exit. But you added so much that it messed up the average entry. It's not the same trade. So it's almost like entering a new trade at every movement down. Like as if I was like going short, 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 short. You will never get a chance for the trade to breathe. It's not the right way to enter. So you always have to have the multiples at the starting point and then add as it goes along. So have some kind of a core default position, but also have, like, let's say 5 micros as a whole. So start with 2 or 3. You can start with 3 and then add 1 and 1, right? So to make up to 5. But that way you kind of minimize the initial loss if it is a loss, but you amplify the profits if it does work out. Does that make sense? Or am I just in my own head, just kind of jabbering at you? How are options on DAX? So DAX index, DAX futures don't have options, right? At least not that I can see any. Like they exist. Everything exists, right? But how many people are trading them? I don't see any. However, DAX index does have options, and I can try and crunch some data. I don't know whether they have. Let me see. Let me find it. I don't have a tracker for them because I don't track them that closely. The volatility is very normal on DAX. On DAX. On DAX. Volatility very normal. Now let me just do. There's a way to change this, so. And I'm just going to do nearby prices because we don't have time for everything to chew up all the data. Because there's a lot of strikes up and down. So I use two companies. I use Tasty Trade for more like micro options because they have they have a better choice, and then I have Interactive Brokers for the major options. So yeah. Is there anyone on TopstepTV that looks at natural gas? I do, and Coach Hoop does. Coach Hoop is your man for natural gas and live cattle and the likes. But yeah, I do look at natural gas. I think natural gas has been a bit weird this this year, because we haven't had the year where the weather's been really cold, and they had more than enough reserves in store. So I think that brought quite a massive amount of selling that was happening. But let's have a look. It does look like we have a weekend gap, and they are trying again. But this is what happened last time, right? So I thought the trend, let me have a look at the weekly because I can't orient myself here. Because I thought the trend actually started in November, right? So I'm like, okay, we're going up. And then they just, sorry, this was last year, yeah. Weekly chart, weekly chart, here we go. So November, I thought we are starting the rise sort of November, right? And then this happened, and then this happened. So I was like, that's odd. And then we made a new lower low. So I'm like, So I did a bit of digging, right? And I'm like, why is natural gas not going up into an uptrend? It is winter. What is up? And it turned out that they had loads of storage reserves. So everybody was like heavily positioned for the downside. So, protective puts all the way down. And I didn't like that because for this time of the year, usually you want to see those longs. They've been struggling. Maybe this is it. But honestly, this year I'm a little bit not happy with natural gas. And it's been quiet as well. So if I look at how much it's been moving intraday, let me just find it. Yeah, so we're still working with like 228 for the entirety of the session, and then London and New York and NYMEX, they're pretty evenly matched. They're like 150, 150. So it's almost like London does a lot of the heavy lifting, and then NYMEX steps in and they run it back the other way. So I'm like, so London is saying longs, but New York is saying shorts. And that's been, so I'm just going to show you the chart because I can't really show this to you elsewhere. So this is London, and then New York sells it. And that's the pattern we see a lot. So London, and then you get NYMEX, they can sell it on. Then London tries to go higher, we get into the overlap. New York, or this is pre-market NYMEX to be fair, they sell it. And then nothing. And if we go back, that has kind of stayed the pattern. London runs it up, NYMEX pre-market reverses it, and then nothing. And again, this is one of the only days when New York went up. So that sort of a pattern I'm not keen on, because it means that it's moving out of hours. So it's like, what does that tell me? That maybe Europe is needing gas, but the States are like, yeah, we're right. So, you know, from a macro side of things, they're not matching up with what should be happening at this time of the year. So yeah, I'm always aware of the seasonality aspect in natural gas for the winter months, and this year it's just not happening. It's just not happening. I can look at some levels. We can, but I haven't been tracking natural gas day to day because of this weirdness that has been. That it's been exhibiting. What is going on here? So I thought I gave it a query and then it just fizzled out on me. I do not know. Okay. And again, we're just going to do maybe up to 4. So a little bit more on the strikes. Do we have anything past 4? Let me just see what range I should select. Yeah, so 4 is, I think, enough for today. So just give me a second to crunchy crunch. It just takes a while because I haven't really done it. In about a week or so, actually. Did we roll? Shouldn't it be H? Did they roll? No. Why didn't they roll? That's interesting. Hold on, I need to check something. I'm looking which one of the front months is trading in. No, so we're still in February. That's odd. Right, so that's wrong then. Hold on, I need to get the Feb options. No, so they've expired. I'm gonna have to give you the March options because they're not there. The options have moved on to March, so we're just gonna have to go along with it. Hey, let's do 20 strikes. So I don't have a way to ping this because at the moment I'm not signed up to do that. So I'm just doing it manually. Yay! But I'm still calling upon my algorithms to crunch the numbers. So we'll see what's happening. Okay, implied volatility is higher, but that's always the case, you know, because the pricing is so low. Natural gas always feels like it's moving more, but it's actually not. It's 200 ticks, so yeah. Right, we are crunching. Right, so we do have some context for a big move. Still heavy put hedging. Like you see, this is what's kind of, it's kind of making me think that this long is not really sustainable. So whenever the puts are like a lot more expensive, it's always the precursor to some kind of a pullback. You know, there are a number of calls as well, but it's just, I don't know, it's a bit weird. So obviously 4 is a major call wall. Three is was the gamma flip, so we're nowhere near. Maybe 0 DTs can provide a little bit more on the intraday side of things. Zero DTs will say 350 was the gamma flip. But yeah, it's just not, like, something about it is not really grabbing me. And it's weird because last year I was trading a load of natural gas and it was amazing. I mean, what kind of setups can we have within the day's range? Let's have a look. So 4 obviously becomes very important if we do get there. Not impossible if they're moving like this. But what I'm thinking is going to happen is that we're going to taper it off right around when midday comes. So basically you hit that 2-hour pre-market NYMEX and then they may start to hedge against this move, which is crazy. I mean, for this move up, 350 was the target, and that started yesterday. So that was it. And now we overshot that. So the next one, what do we have as the next level? I mean, really 4. There's not... There's nothing in between. So time of day might be the only thing that saves this. Yeah, so there's nothing in between 350 and 4. But it's not going to be like, oh yeah, no, we just run to 4. Because there's the intra-session behaviors that take place. So I want to see if we get some minor level somewhere. So at 380, there's some open interest there, right? So it's not super trivial either. So that could be And that could be a call resistance there. Let's call it a call wall. And then if I look at the ADRs, let me just see where we are. I mean, I'm guessing we're way above it. Oh no, we're hitting it right now. So ADR high was at 377 roughly. So we're literally there now. This could be an interesting short setup. You're hearing my elderly cavalier snoring in the background. He doesn't normally snore. I don't know what's up with that. And then to the opposite side, we have ADR low, currently sitting at 355. That could be subject to change. Why? Because when you exhaust or exceed upside, this one becomes static in the way that we calculate it. But then this one can keep moving with more higher highs, right? So if it's if this one just kind of starts running to the downside, then this one will still stay because this is your highest high of the day. But if it carries on and carries on, then this one will keep moving, because at any point when they start to run it backwards, you need to have that reference for when you are effectively exhausting to the other side now. And that's why it tracks it. But it doesn't change the ADR high that was already exhausted, exceeded, and is giving you information. So now we have either a possibility for an outlier day, but I'm doubting that because of how London versus NYMEX relationship usually is. If London runs it up too far, there are very few days they're just going to carry on up, up, and up. So I'm guessing we're going to see some sell-off into that overlap, and then maybe have another NYMEX boring session. So if anything, this would be a good trade for the overlap fade. I don't like trading too many things during the overlap, but this was clearly a major move, and I'm okay with that. When I'm not happy trading it is let's say you're trading something that doesn't normally move during London, and then you want to keep a position through the overlap. Well, you're going to get that volume increase, and it's just going to like smack you right across the face. I'm just going to see what's going on with this copper. Okay, so then we're back into the Asia low, where the TPL is doing. Kind of teasing initial balance. Don't fancy that. So I wanted to stay underneath. Don't like that. If my stop market by one, the one that I entered, again, if that doesn't survive, I'm going to take all of this off. Because I don't really want to spend 2 hours, 3 hours in a range until they decide what they want to do. At the same time, the way they ran the failed auction on a 30-minute time frame, it's this hammer candle. I really dislike hammers intraday. They have a poor prognosis for like follow-through moves, because I feel like most of the move is already done. Unless something extra happens and they start to run it up. So I'm actually okay to try and see whether we can reject effectively the initial balance again. But yeah, right now it's probably establishing that horrendous range that we usually get at this time of the day. So if this one doesn't survive, I will kill the entire position and just call it a day. And then I'm going to come back for For NY Cut, which is going to be the time of the day when I join fast markets for about half an hour. I was supposed to be on for an hour, but again, I have a thing I need to get to. No reshort, no. We don't do grasshoppering here. It's one position and we commit to it. Because I'm looking for a larger swing here, and it may not happen now because it's the wrong time of the day, frankly. But it still may get stuck in a range, then decide to go. But I'm not going to be losing my eyes doing a million trades based on the same idea, because it's the same trade, right? Nothing much has changed. The only time that it would change is if we reclaim VWAP, and then we rotate, higher. But I'm not looking for longs today. I don't think we are in a good position in the dealer hedging perspective. Oh, Lighter is here. I haven't seen you here for a while, man. Yeah, good to see you. What is this application you're using? Oh, believe it or not, that was MetaTrader. Oh, AMP Futures, but it's got my indicators, so it doesn't. It's not like your core, just like bog standard MT5. All right, MS says, here's what I get confused about. Around a third of the time, London does nothing or some wiggle. Asia goes either up or down, and New York goes big reverse. Is there a way to set the charts with the time sessions? So I call that the Tom and Jerry chart, the Tom and Jerry chase. I actually teach this to people. There are specific times of day when the sessions will chase each other, right? So depending on the product you're trading, it will be a little bit different times. But it is a known thing, right? It's a known thing, and you've noticed that there's a pattern there. So that is why I say time of day is a level. That is where that concept of mine comes from. And that's where some of my assumptions of what should happen they're usually based on the time of day first. So it's like, okay, it should fade now. And then I look for the level that I can use, which could be either an ADR, or it could be a value high, value low. It could be an options level, or it could be a confluence of those. And then I look to find the playbook within the playbooks, like 6 playbooks that I have, how I can position myself for the assumption. And then all I'm doing with tape is to just confirm that there is some juice behind that idea. If there's no juice, then we do like a partial and then bail, 1 hour, whatever. But if there is juice, and if it's still, lots of time left on the day, then those tend to be pretty nice sort of failed auction type trades. Now, the metals do love to fail the auctions, but usually it's when we have a very tiny initial balance. We have a pretty sizable initial balance today on copper of 88. I can see that gold is starting to turn around. But yeah. So anyways, back to natural gas. So I think 380 remains an interesting level. 350 was a level, but that's like quite far away now. VWAP is always an interesting one. And then you also want to have a look at what the previous session was doing. And where the value area for that one is. So this is your value area. We're a little bit outside of that, but at the same time, we are only so is this, let me do this another way. Yeah, so 1.6% up at this point from the value. Now, because natural gas percentages are a little bit skewed, this is actually in line for mean reversion later on. We still need to wait for this to kind of settle and then to roll over. So this is where I would be looking at the tape to see whether ADR high can bring us some reversal, but not before 11 o'clock, which is in another 20 minutes, maybe even another hour, depends how they want to play this. And then I'll be looking for a fade. Would have liked to have hit this 3.8 level on natural gas, but this could be a really tasty little trade here. All right, so we're outside of the initial balance again. Let's see if we can break down through this former excess, because this is excess, and we have built up some structure. But when I look at the TPO profile, we had single print, 2 TPOs, single print, and now we're building 3 TPOs. And I'm still fighting not to say C3POs, like a proper Star Wars nerd. 3 TPOs here, right? So we'll see 4, in fact, 4 now. That is building structure. So it is possible that we just stay stuck in a range now, that this is the new range, top and bottom. If this doesn't take out the wick, so go back into the wick, I don't really want to be in it, and that would be the end of it. And it is conducive to this time of the day during London bringing us nothing, even though it was a bit more of a lively move than usual. But sadly, it didn't stick below the Asia low, so it's like, what gives, man? They wicked it down. Still not a true wick, though. This is still not a true shakeout then reverse, because this is all very even. So I'm still thinking at some point today we're going to see that sell-off, but maybe not for this part of the day. MS says, several days where we had huge reversal from overnights. Some bro asked, what's the chart pattern? What's that chart pattern? And Hogue and the boys and I answered, it's a F the overnight shape. Yeah, exactly. But yeah, I call it nicer. I call it the Tom and Jerry chase. So yeah, sessions just fading each other aggressively. The whole mechanics behind it is that when they run it up, like this natural gas, for example, when they've ran it up so much overnight, like how much more cash can they continue to make going higher before they have to go home, right? So the previous session is like, we're going to be closing our positions, and this usually happens around the Euro close time. It's like, well, it's time to go home. We need to book some profits. So this is what the enforced hedging into settlement does. That's why it's important to note that there's several things that happen intraday that can bring these like wobbles or very severe pullbacks. And that's why it happens, right? So they run it up, they get to the end of their day, and they're like, okay, well, we're just taking profits here, right? But then the other side goes, actually, well, we can't make money to the upside. Well, let's hedge against this move now. And this is where the dealer hedging gets a bit amplified. But sometimes you don't get that. Sometimes you get this move up, and then they just pin it. So it depends. Like if we are close to expiry, I think these options expired, though, NGGs, right? So I think we're NGH now. So I don't know how. So the futures haven't rolled yet. But the options are trading the next front month. So what's going on there? Slightly odd, I will admit. But yeah, so if there's a thing called gamma pinning, then they will keep the options pinned, the price pinned to a particular level. It actually happened in crude oil. If I go to crude oil, and we go to the daily chart maybe. We had the pin last week. So they looked like they were going up and up and up and up, and then they pinned it at 62. And they pinned it, and they pinned it. This is usually the time. This wasn't last week. They pinned it at 60. Sorry. Yeah. Hold on. What's going on here? 20th. Yeah. So, yeah, there's a 60 pin, right? Sorry, I keep going backwards, thinking this is like an intraday chart or something. It's great going deep. Yeah, so they, all this previous week, they were trying to go higher, but then it kept coming down, going back up. I mean, look at this day. This is absolutely horrendous, right? Big doji, long-legged doji with both sides, and then they ran it back down. So that would be an effect of a gamma pin into the option expiry. If we look at it on an intraday time frame, then I can go back to see what they've done. Yeah, so there it is. And when does that happen? Well, it happened basically at the expiry of the options, right? So this was COMEX settlement. And then they just decided to immediately run it down. So that's the gamma pin effect. And then since then, they haven't been back. We now have a new contract. So that idea of gamma pinning into expiry is not going to come in until next month. Might be a case of gold gamma pinning because gold contract will expire this week, this Friday. Maybe something to consider there. So maybe we do the gold. I have to buy a gold blazer. I don't have one. I do not have one. Because I bought the silver and copper because that's what I was trading the most. But I've never had a gold blazer. You know, this one's from Reese. It's actually really nice and a good one. And the other one, I don't know where I got it. It was also some designer thing. MS says, some clever and patient people will be making mad bank off CL since it's never so far beating inflation, continuously upping storage supply for multiple players. Yeah, so I've been doing crude oil options for years now on the basis of the range and gamma pinning and stuff like that. So yeah, it's certainly interesting. It's one of those products where once you reach the top of the range, it tends to get very predictable because I believe they are artificially holding it down. So if we just look at it from a weekly time frame, there was a time when this was even more even. Like for example, if you have these moments, right? If you can identify these ranges. So what I tend to do, I do long calls when we're down here because obviously it's a short biased product. So if something starts, and we've all lived through COVID, negative crude oil futures, right? So I will do long options at the bottom edges of very obvious ranges, but then I will short them, do short calls. Yeah, it's too early for options talk. But yeah, so I would do selling of the options at the edges of the top edge of the range, because you can be sure that it's not going to go higher, right? So relatively sure, and then you can get all of the theta decay into your pocket and collect the premium as well. So that's a pretty tasty one, and they happen very, very frequently. So here's another one, small range but still range. This one I didn't really see, I'll be honest, when I was looking at the chart a few years ago. I definitely saw this one, but then I saw this one. So I saw it from here. So yeah, some very, very tasty trades to be had. And then, what was the most recent one? So I saw the gamma pin around 60. This was on the previous contract, not this one. I think it went as high as 61, but then they stayed there, and now this is a new contract, so it's a bit higher. So this one is 62.60 was the top. But by the same token, you can analyze the highs and lows, right? Right now we don't have a tighter range. It's a bigger range. So where is the next available area where I might want to look at stuff? About 65, 66. So once we get up there, I would like to see whether maybe... Oh, actually I see one. No, I see one that's actually closer. This one. Let me get rid of some of these volume profiles. Yeah, so there's a high here that we ran lower from, and we hit that high again, it looks like on this chart. So 62.50 would be my strike for maybe some short options if we ever get there. And for longs, I mean 50 remains the number. Maybe 55, I don't know, maybe tentative 55 for longs, but yeah. So that's kind of what I do. On the other side, I don't really do crude oil intraday anymore, but I'm still very active with it in the options. I just don't like it. I do not like. Yeah, I just don't like it intraday because it's not worth it. You need the extra time to get more ticks out of it over a number of days. Otherwise, intraday, you get nothing. You get the nothing. All right, so I'm going to finish it up here and... Yeah, so MS says, so you buy call and then short when it looks precarious and exit the future if you're wrong, which you kind of expect to be wrong, yeah. Re-average. So I don't necessarily hold through multiple rolls, and especially I never hold long options to expiry. I will usually hold them for maybe a week, but I do buy them with, if I can, with 45 days to expiry on the long side. And then I will close it within a few days because I'm looking for moves that have, and prices that have enough sort of implied volatility to bring me a quick move to the upside when I enter, effectively within 1 or 2 days. And then if I get that move within 1 or 2 days, I'm done. I close the long option. With short options, I try to hold them for as long as possible. Because again, the time decay works in your favor, and if they expire worthless, then obviously you get your premiums. So it's difficult. Like actually, I saw Elaine posting options for beginners, and it's this guy that's like talking about. It was so funny. Talking about some ways of, like, it's an engineering thing, but every word that he's saying is just like completely unintelligible. You have no idea what he's saying. He might as well be talking in like Sanskrit or something. dead language. And she said, yeah, how options trading sounds to beginners. It's like, yeah, that's exactly right. But the more you get into it, you start to understand the mechanistic nature behind them. And it's endlessly interesting. But then you realize that you can take advantage of certain market conditions. And I'm like, well, why would I torture myself with crude oil intraday that has like $1 of range when I can hold it for, several days and get whatever I want from it? So, but I'm not rolling contracts via multiple months, if that's what you mean, right? So I would just have an intention. And I mean, I'm very rarely wrong on them, I've got to say, because of the selectivity of where I'm entering and the way I also look at things. I like to identify the actual strike prices that are like, implied volatility and open interest, and I smush all of that with the overall implied volatility, top of ranges, so basically just to identify a little bit better where, the strikes should go for the options. And then sometimes if I'm not sure, I will do a spread, not very often, but sometimes, yeah. If we're very range bound in a tight range over like a week or 2 weeks, 3 weeks, you can make a lot of cash just doing market neutral spreads. Oklator says, life is like an options contract. The closer you get to expiration, theta seems to decay a lot faster. I know, right? I'm experiencing that actually, man. Like the days, weeks, and months are flying by. I can't believe I've been in this new house since May. It's gonna be like, it's like crazy. It's crazy. Tate Turner has a question. Let's end it on that note. I noticed a slight mindset shift when getting to the Express Funded. I understand it's still sim, but any tips for overcoming hesitation during the transition from eval to Express? Size down in the beginning, so trade like 1 or 2 micros to get used to the not hesitating. And if you are hesitating and you end up in a loss as a result of hesitation, at least the loss is going to be minor, right? And I'm not saying silver micros. Stay away from the contracts where you can't size down properly. So you can do one MHG contract, 1 micro copper. You can do 1 micro gold. Just don't do 1 micro silver, because that's effing painful. Because it's not a true micro. It's very expensive. But until you spend like let's say 2 weeks in the new situation where you're just trading minimally, because right now, because you're noticing a mindset shift, let me just get some water. Your primary objective now is not payout. Your primary objective is keep the account. Don't even think about profits now. So you just need to get used to the new mindset. And the only way you do that is to size down and keep trading it, and then eventually it just goes away. But it has to be done on like the most minimal position size that you can possibly have, which is 1 micro. So yeah, another thing that you can do, you can try using limit orders that will push you into a trade. I personally don't like limits because I have an opposite problem where I'm generally pretty aggressive once I see the opportunity. I've never been in that camp where I have a problem entering a trade. Maybe like it happened to me maybe once in the beginning when I lost my first account. This was like in the first 2 years, so it was a long time ago. I blew up a 70K account that I've been building up for like 2 years. So for about a month after that, I was shaking, and it was very difficult. But then I immediately, started getting on board with like weightlifting and just to get rid of stuff. That's another thing. You can do physical exercise. I like weights. I really miss them. It's a shame I can't exercise anymore. But when I was able to, doing a nice sort of heavy weightlifting session before you trade, that would generally sort out any emotional dysregulation that you could be having. And then using limit orders to push you into the market, or stop orders as well. You know, if you're running more kind of breakout type trades, or even mean reversions. You know, if you want to go into mean reversion, you could put in a buy stop somewhere. Let's say failed auction, buy stop. And then you just remove the ability for you to have control over entry. So now it's the platform has control, right? But more importantly, like I said, size down until you get used to it. Don't change anything else. So the stop size, targets, setups should all be the same. It's just the small size that should be the variable. And let me know how you get on. You know, let me know how you're doing, whether some new gremlins start occurring, cropping up all over the place. And then we can try and find a solution for that as well. So that's going to be all for now. You will see me for fast markets at 9 a.m. Central today. And we'll see whether we can get this copper to make a move on at some point today. If not, there's always tomorrow. There's always tomorrow. But I'm probably going to be staying up for another Asia session. Although, I don't know, it depends how I feel, because I feel not that good today. I don't know why, I just woke up and yeah. Anyways, let's see what the day brings. The closer we get to COMEX, maybe I'll go natural gas. I don't know. Maybe I will go to the energy side today if I see anything of interest. We are hitting that 3.8 area, so if they hedge it here, that could be a tasty little trade to the downside. Tasty. So yeah, as usual, precious metals getting stuck in a range for this time of the day. LME is going to be the decider on copper, because that's where base metals are traded. And then we have COMEX for precious metals later on. Until fast markets, I will see you a bit later. This was the Euro trade. And yeah, let's see what happens. I'm Mark Soka D, and this was the Euro trade on TopstepTV. I will see you very soon. Take care.